The ticker symbol is TKC. This is Turkcell mobile phone operator.
What the heck is going on over here?
I know. It's a phone operator in Turkey based out of Istanbul, formerly Byzantium. The Byzantine.
Constantinople.
Before that, I think. Yeah, Constantinople.
Isn't it the Byzantine Empire?
Yeah. Okay. I'm a Byzantine Catholic, Paul, so I should know this crap, but I don't. The company has 34 million subscribers as of a long time ago. What a silly data.
Okay, so guys, it's a $4 billion company, PE of 7.8, check mark, and a profit margin of almost 15%, check mark there.
Double checks.
Net income of 522 versus cash flow of 654. So I like seeing that. Dividend yield about $100 million, almost 2.5%. So not bad, okay? Not bad at all. I like this.
Revenue growth over the past 5 years is pillar number 3. Now, this company reached years ago in 2018 was upwards of like over $10, maybe even $11. It's down to $4.64.
All right, 1.75 billion to 3.5. They've doubled their revenue in the last 5 years. Incredible. Good work, guys.
Okay. Profit growth, I would assume that's killing it too.
Yeah, and this is the way I like to see it. 184 to 522. So like I was saying, guys, their revenue is doubled, but their profit is almost tripled. That's what I like seeing. Because to me, that makes sense. If you have a good gross margin, as your revenue goes up, your profit should go up even further, right? That's the way it is. Good stuff, guys. I like it.
Pillar number 5 is shares outstanding.
Praise the Lord Jesus Christ, my Savior. 925 to 864. Check mark there.
Wow, okay. This is 5 straight checks. Paul, I can feel the purr from your grundle. Pillar number 6 is current assets. Give it to me, baby.
2.5 billion in current assets, 1.4 in current liabilities, plenty of cash on hand.
Wow, I'm baffled here. 6 straight checks. Free cash flow growth.
And I want to make sure the free cash flow is right here. Cash from operations, 1.88, 1.59. Why is it, okay, here's another one then. Annual.
Is it the Turkish company that's the foreign company that's
you know what it might be?
Go on.
No, it can't be that because it's Viacom.
Mm-hmm.
Okay, let's see here. All right, I'm gonna go to wide charts here. Okay, so free cash flow. Oh, negative. Oh boy.
What's going on over there?
Oh boy.
I love when he does that.
Oh boy.
What's happening?
It's a negative 1 billion here to a positive 700 million here. So that's a check, but negative 150, negative 0.15, 100 million, and then 590 million. So that's 800, 1.4, 1.25, $250 million in free cash flow over 5 years divided by 5 equals 50. So I'm not going to go, it is definitely an X on the price of free cash flow, but guys, I want you to see that they've gotten out of free cash flow problems, okay? So the growth is there. So this is something where I probably wouldn't even look at free cash flow in a 5-year term. If you believe the company spent a lot of money in capital expenditures, which they show they did to grow, the operating income is coming up there. I don't know if you go off of 5 years. It's just probably not fair. Understand the business and say, hey, I think this company is past these issues of operating cash flow. Let's move on, and you can apply a higher multiple to it. Because last year was $600 million, $700 million in free cash flow. What's the market cap of the company again?
$4 billion.
So it's selling for less than 6 times free cash flow on a 1-year basis. So again, if you believe in this company, you're comfortable with investing in Turkey, a Turkish company, this is a buy all day long, without failure, So can I report this? Well, go ahead and talk, Seth, why I report this bug.
Paul, I was just going to bring up, someone asked me recently, I was just at a football game, a friend of mine, Mo, I'm not flag football, the kids are playing, and he sort of said, I invest in these high-flying stocks, the Apple, the Google, all the safe ones.
Yep.
And he said, what do you guys actually do on your show? And when he confronted me, I was like, well, let me think about this. We find companies that are potentially undervalued with more room to grow than an Apple or a Google.
Right.
In our opinion, of course. And maybe these same companies with less debt and more free cash flow that can withstand.
We don't necessarily need more
correction.
growth potential. No? We need a mispricing of value. That's it. So it's funny. I was reading a book, Good stock's cheap. One of his great lines is, there is one fundamental thing that all you value investors believe. And that's where value and price are never, ever linked up. And you want to find it where the price is below the value. That's the one fundamental thing that value investors will believe, that the market is not efficient and there'll be a mispricing of price and value, and our job is to find that mispricing. There are different ways to be a value investor, but that's one fundamental belief that all value investors have. That's all we're trying to do, is say, guys, take the emotion out of investing, take as much as you can out, and look at every company and every situation and say, what would I actually pay for this? I'm not going to worry about what the market says. What would I do?
Right.
And if you buy a portfolio of stocks that look like that, you'll probably do well over long periods of time.
Right.
And we're talking well. I was explaining to him, like, not like Bitcoin well, like
It's not going to be 10 times well
like
in 2 months.
2% would drastically change your entire retirement portfolio.
We have talked. Do you want to do that? I mean, do you actually want to show people what that is?
It was eye-opening last time we did it.
Mm-hmm.
But yeah, I think people. So to sum it all up, is we're not looking for like these 10x, this 30x malarkey. Paul has taught us we don't need those.
And that's kind of what I went to last week. Paul was talking about some stock, and he said going to the moon. And I was like, why does every single stock have to go to the moon? Why can't stocks never went to the moon before 2-3 years ago? That was never a thing. Why can't we just? Warren Buffett has made hundreds of billions of dollars by no stock that has ever gone to the moon. So it's doable.
Yeah,
it's absolutely doable. Our goal is less exciting, but it's. Would you look at the difference here? And I'll pull up our retirement calculator.
This is one of the tools you'll get as a patron. You get access to everythingmoney.com, the beautiful software that we're using. And this is part of it. You'll get more and more and more as the show progresses. But this retirement calculator, we did a whole video on it last Thursday that came out about how great I felt when I finally figured out how much money I could have in the future, how I want to live, what percentage of my life now. It's incredibly eye-opening. And the difference, as I said before, between a market return of 10% and maybe getting something like 12 over the course of even only for me 25 years is just astounding. And Paul, you're typing in some numbers there. What do you got?
So I'm sitting here just to show you guys examples. So let's say you're age 40, going to retire at age 70. Your current savings is $200,000. Your annual savings is $25,000. You increase your savings by 5% every year. Your annualized returns are 10% while you're working, 6% during retirement, and you're going to live for until 100, which is 30 years after retirement. Inflation, blah, blah, blah. You have enough to retire. It tells you you'll die with around $13 million in your pocket. $13 million. Now, take the slow and steady and boring way. Add some options in there, etc. Let's say you take this 10% just to a measly 12.5%, and your 6% to a measly 8.5%. So remember, 13 million right here.
Mm-hmm.
Now look how different it is. Same numbers and everything else. $145 million. Almost 12 times more money by being boring. That's it.
And the decision you have to make now is taking this disciplined, boring approach is you're going to see all of your friends talking about Bitcoin and Tesla at cocktail parties, and you're going to be investing in companies like this that have incredible that are incredibly underpriced at the moment.
And go ahead.
When you start going to the cocktail parties and the market is where it was in March of last year, they're going to be the ones coming to you saying, what the hell am I supposed to do at this point?
Guys, I'm just telling you, is it worth learning? Options alone will get you there. That's all I'm sitting there saying. This is there. You can't even imagine. How can you go from $200,000 and 25 grand a year to 145 million? It's the power of compound interest over a 60-year period of time.
I didn't even take this in, Paul, because I would think if you watch other channels, like 40 seems really late. 200,000 seems like you're not doing that great at 40. You better have more than that. I'd be freaking. And then 25 grand a year is just it's an IRA at work, and it's a Roth IRA out of work. Nothing special.
401k and Roth IRA combined.
$140
And by the way,
million?
Sean, yeah, I know. And Sean, thank you for signing up for the Patreon.
You're right, Seth.
That's the thing. And the other thing is, guys, here's why, and we're going to talk about it. We're going to do a whole video on this. This is why financial planners are terrible. If your financial planner had given you from $200,000, had given you at the end, when you retired, when you died, oh, so you don't even have enough money. Let's say you have 500,000 and you save 50,000 a year, which is a lot. If your financial planner had given you $12.6 million when you started with $5 When you died, you've been like, oh, my financial planner did awesome. No, they didn't. They got you 7% return a year. And then 5 after.
Change that.
That's the thing. Compound interest works so well that can make a financial planner look brilliant even though the returns are crappy.
Yeah.
Because over long periods of time, you see 12 million and 500,000. You're like, oh my God, I have 60 times more money than this. Not 60, 25 times more money than this.
Change the 7 to 10.
I'd change the 7 to 10.
Say you manage this yourself, you put it yourself into low-cost ETFs, you're not paying fees every single quarter, every single year.
88 million versus 12.
There you go.
That's what your financial planner costs.
Your financial planner
So for
sucks.
all you people out there who say, I need a financial planner. Okay.
$60 million
You just lost, no,
difference.
more than that. $75 million.
Your financial planner is nothing but a salesman. They
By the way,
suck.
that's fine. And if you need that warm and fuzzy feeling inside, go for it. Give me $5 million. I'll do it for you.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.